we have Arizona Sonoran. I'm extremely excited to welcome back George Ogilvie. George, I haven't seen you in ages. It's been too long. Thanks for joining us this morning. How are you doing?
I am well, thank you, Kai. Thanks for the opportunity.
Oh, fantastic. Yeah, I'm really excited to hear it firsthand from you this time, Arizona Sonoran, and really exciting Arizona copper developer, not an explorer, a developer, fairly late stage. Can't wait to listen to your presentation. Thanks so much for joining us.
Hey, good morning, everyone, and thank you for joining us this morning. Obviously, it's Arizona Sonoran Copper Company, and the title of our presentation is Copper Invest in Sustainability. We do make some forward-looking statements, so I'll draw your attention this morning to the cautionary language. Why ASCU? Well, this is a brownfield site which is situated in Arizona. It's a former producing mine from the 1970s and 80s. It's a large copper porphyry system, was formerly known as a Cactus Mine and belonged to ASCU. It closed in 1984 when obviously the copper price was only 60 cents a pound. So the mine was uneconomical, but there was a significant mineralization in the ground. Today, we currently have a compliant resource of 1.6 billion pounds of copper in the indicated resource category and 1.9 billion pounds of copper in the inferred category. Last year, the company put out a PEA and we looked at an 18-year mine life with an average annual production of 56 million pounds of copper cathode production. We ran the resource at $3.15 a pound of copper, and the financial and economic model was ran at $3.35 a pound of copper, well below today's spot prices of $4.50. The NPV8 on the project after tax was 312 million US dollars, and the IRR after tax was 33%. The key thing to note about this project is it's all on private land, and therefore there's no federal regulators involved or Army Corps of Engineers. So the permitting process is very much simplified. Today, we have a permit to take water for 50 years, and we have what's known as an aquifer protection permit for a vast surface stockpile, which was mined by ASCU back in the 70s and 80s and is sitting on surface. Today, we've embarked on a 35,000 meter drill program this year, which will infill drill the indicated resource to measured, ahead of a bankable feasibility study, which will come to market in December of this year. And we're also exploring right next door on a property known as Park Salia, which I'll talk to at the end of the presentation. Thank you, Alison. A little bit about the share capital structure. Today, we have 70 million shares issued. The options and warrants are in the money, fully diluted, therefore 80 million shares issued and outstanding. Today, the company has approximately 25 million US dollars cash in the bank and is fully funded through to the end of the year in the delivery of the bankable feasibility study. Only 1 million US dollars of debt, which we intend to pay off in the next couple of quarters. That'll give us a nice clean balance sheet ahead of the project financing at the end of the year. 4 analysts covering the company, target price $2.95 to $4 Canadian, with a consensus at $3.15. Personally, myself, I've invested 2.8 million Canadian dollars into the company at a weighted average price of $2.48 Canadian. This morning, we were trading at $2.20, giving the company a market cap of approximately 150 million Canadian dollars. So what have we completed late last year and this year, early this year? We completed the infill drilling for the pre-feasibility study. That's moving inferred material up into the indicated. We have a pre-feasibility study coming to the market in July of this year. Recently, we announced that some of the land we picked up last year has been rezoned for industrial. So that's good for mining purposes. And we've recently strengthened the management team, bringing in a very experienced CFO who worked with me formerly at Battle North Gold. Nick has raised over 2 billion US dollars in the capital markets. And of course, he's been brought in with the project financing in mind at the end of the year. And we've also brought in an independent director, a lady by the name of Sarah Strunk. We've also embarked on an ESG strategy and engaged a group called Minviro. They've completed a life cycle analysis for the 18-year life of mine, and we do believe that we have a pathway to net zero carbon emissions, which we'll be announcing in the second half of this year. The PEA revealed that once the project financing is in place, it's an 18-month construction and development period. We would hope to begin that in the first half of 2023, meaning first production will be seen at the end of 2024 from the project. The project's located 3 kilometers from the city of Casa Grande. Casa Grande has a population of 55,000 people. We're 45 miles south of Phoenix with a population of 4.5 million, and we're 100 miles north of Tucson with a population of 1 million people. The area is very well serviced by roads and infrastructure. We even have the main power line running right through the property. Obviously, as you're all aware, Arizona is the largest domestic supplier of copper into the US, and on an annual basis ranks very highly in the Fraser rankings for mining investment. So in addition to the water and the APP permit, we'll be applying for additional permits this year. That will begin in the second quarter, namely the industrial and development permit and the mined land reclamation permit. We would anticipate that after applying for those permits in the second quarter, we would have them in hand by the end of the calendar year, in line for the production of the bankable feasibility study, the project financing, and therefore allowing us to begin construction and development in the first half of 2023. Today, just to break down the leachable material, this is a large copper porphyry system. It consists of an oxide, a leach enriched chalcocite, which we plan to mine using heap leach pads and sulfuric acid on the oxide, a bio leach on the enriched material, and then the pregnant leach solution goes through a solvent extraction electrowinning plant, creating a copper cathode that's then sold out into the market. You can see today, as far as the compliant resource is concerned, we have 1 billion pounds of leachable material at 0.72% total soluble copper, followed by 900 million pounds at 0.41 total soluble copper. The surface stockpile that you see there has now been further infill drilled and is now sitting, 90% of it is now sitting in the indicated category ahead of the PFS. Obviously that's important because only measured and indicated resources will ultimately convert over into proven and probable reserves. We'll be producing maiden reserves with the PFS in the summer of this year. So now we get on to some exciting exploration results that we put out on Park Salyer. We drilled 2 holes there in December. There's currently an additional 10 holes being drilled between now and the end of April. The first 2 holes hit significant copper porphyry mineralization, and based on the geophysics, we have a large untested area of over 1.2 kilometers in strike length and 1.2 kilometers in width when we look in plan view. When we apply some high-level volumetric calculations to that, we believe that there's anywhere between 40 and 90 million tons of additional leachable material that would grade between 1 and 1.3 total soluble copper, which would yield an additional 1 to 2.3 billion pounds of leachable copper in the ground. This is over and above the 3.5 billion pounds that we currently have in the compliant resource. So a little bit more detail on those holes. You can see exactly where they're positioned. You can see ECP 045 and 42 were drilled in between hole 18 and 19, which was drilled by the company about a year ago. And hole S200 and S201 was drilled by ASCU back in the 1980s. So in total, at this point in time, we have 6 holes drilled into this deposit. We have $3 million in exploration for Park Salyer in the first half of the year. The plan of action would be to have an internal resource model by the summer. Once we've produced the PFS, we then will likely want to accelerate the exploration on Park Salyer in the second half of the year. And when we produce the bankable feasibility study at the end of this year, we probably want to include a maiden resource on Park Salyer at that juncture in time. So just to conclude, obviously we believe that the company has a very strong ESG strategy and framework. We think that the copper fundamentals are extremely strong on a go-forward basis. We have a very nice tight share capital structure that's going to help minimize future dilution to the shareholders when we get to the project financing. We have an experienced management team here that has a proven track record of delivering exceptional results for the shareholders, supported by a very knowledgeable board. It's a brownfield site in a tier 1 jurisdiction with some infrastructure already in place. There's robust project economics in the PEA, despite using conservative assumptions. We already have some significant permits in hand, and we believe over the course of the next 6 to 18 months, the additional permits will come, given there's no federal regulators involved. We're only dealing with state and local municipality. Lots of organic growth, both within the Cactus project itself, and then when we start to consider what's going on next door at Park Salyer, which is only 2 kilometers southwest of the main Cactus pit, we believe that over time we can add additional resources and reserves there. And of course, as we grow this company into eventually a 50 to 100 million pound copper cathode annual producer, given the jurisdiction and all the potential upside, certainly from an M&A perspective, we believe that we can be the acquirer, or in fact that no doubt the groups will be looking at us as the acquiree. So with that concludes the formal part of the presentation, and I'll hand back to yourself, Guy.
Oh, fantastic. George, thank you so much for running us through it. Really, really insightful. And I'll start us off with a question, and I encourage everybody who has a question to either use the chat or the Q&A function. But one question that came to mind listening to your presentation, George, was why not skip the PFS and go straight to FS? I have a suspicion how you will answer, but I want to hear it from you.
Well, I'm a mining engineer at heart, and, I truly believe that we have to follow the right processes. And, that means that as part of the PFS, there are various trade-off studies that need to be done. Those were never done as part of the PEA. So we have to work through that. And, I'd rather put a PFS out in the summer and show the market that the base case project built off of reserves is actually credible, and we can make some significant returns for the shareholders of the company.
Okay, that makes sense. My answer would have been, based on how you presented, is that you want to wait for Park Salyer to come into the feasibility as well, that you might want to incorporate that as well.
Well, it'll be in the bankable feasibility study, but it's fair to say it probably won't be in reserves. So it won't actually be part of the mine plan and the financial and economic model. But certainly if it's in there as far as resources are concerned, and maybe some of it is in the indicated, but I think predominantly it will be in the inferred category. So people can see the potential size of the project, but it won't actually be built into the economics.
I hear you. Okay, fantastic. Yeah, I appreciate that. Let me just double check so I'm not missing any questions from the audience here. But also, maybe another question is budget to feasibility study, to bankable feasibility. So you talked about exploration budget for Park Salyer, but can you run us a bit through the budget? Where are you going to spend money, and are you financed, obviously, for it?
Yeah, we've got $25 million cash in the bank today. At the start of the year, we had $30 million. Our full budget for this year is in and around $28 million. 22 million of that goes into the actual project, the technical studies, the infill drilling program at Cactus, the exploration. There's 5 million in G&A, both at corporate and obviously some G&A at the site. And then for those people who followed the company, about a year ago, the company only had 2,100 acres of land in and around Cactus. We increased that land position significantly today to 4,800 acres, which now gives us enough land for all of the infrastructure that we envisage over the 18-year life of mine plan. It did come at a hefty price, though. We had to buy that land from private land owners. And subsequently, just last week, there was a $7 million land payment to one of the landholders for that land that we've acquired in the last 12 months.
Interesting. Okay, no, appreciate that, George. Super insightful.